All right, guys, welcome to today's episode of The Buff Show, a show dedicated to empowering you along your real estate journey. Today we have Michaela Kerrigan, my co-host. Say hi, Michaela.
Hello. Hello.
She's with our brokerage, Mountain Buff, and she's kind of the office manager. She's super knowledgeable when it comes to real estate, has helped many clients along the journey. And today we have a special guest, Shelby Montgomery. Shelby,
Hello.
welcome. And you're with First Community Bank.
Yes, I am.
So Shelby is a lender we work with a lot, and she's helped a lot of our clients through the home purchasing process. And we wanted to have her on to go over everything you need to know and learn about loans. So Shelby, can you tell us a little bit about yourself?
Yeah, sure. So my name is Shelby, of course, and I have been really in the banking industry for about 7 years now. So kind of a long time. I graduated high school, and that's basically all I know. So that's been a great journey, and I'm married to my high school sweetheart. His name's Brayden. And we have a 1-year-old baby girl. Her name's Vaya.
They have the cutest little family.
Oh, she's so yummy. Oh, my goodness. So lucky to be her mama. And then we have a mini Aussie, too. Her name's Leela. So we just love it. It's great. And we just bought our second house. Well, I mean, we don't have two, but we bought I wish.
Yeah.
But we just got into our second home in March of this year. So we're loving it there, too. And Michaela helped us get in that home. And it was a great experience. So we love it.
No, that's awesome. Well, thank you for coming on today. We're excited to have you. So starting off, can you break it down simply? What is a loan officer?
Yeah, so really a loan officer is just the middleman between the borrower and the underwriter. That's the best way I think I could sum it up. We're kind of like the advocate for the borrower. We get to know them and their situation and their financials and things, and then we help submit the application, and then the underwriter does the background stuff, and we're just the communication between the two. So if the underwriter really needs anything more to get the app done, then we relay that to the borrower, and we help it get done. So it's a big communication piece between everyone, and so.
Awesome.
Yeah.
What made you decide to become a loan officer?
Really, it was so crazy how it all happened. It was just an awesome opportunity. I just got, talking with my manager about it, and my now manager, and he was telling me everything about it. And I was like, that checks all my boxes for what I want to do for a job. I want to help people because I've been helping people for so long, and I love people. And I am super, I couldn't be behind a desk. I just couldn't. And This is that job that I don't have to do that. And really the opportunity and everything's it's limitless. It's for what I want to do. I can control, my outcomes. And so that was a really big factor of why I wanted to do this. And I think too, looking back to my first home buying experience, I'm like, it was great in so many ways, but I would have done it differently knowing now what I know. And so I think that was a really big reason too why I was like, you know what? If I did this, this is what I could bring, and this is how I could help people. And so that's the biggest reason I think of why I wanted to get into this. And I don't think I'll do anything else. I just love it. It's great.
No, that's awesome. Shelby's one of the bubbliest, fluffiest people you'll ever talk to. And so
I feel shy right now. I'm like,
yeah, that's because we have the spotlight on you. No, but she seriously is the best. And if you ever work with her, she'll make you leave feeling like you're $1 million. So
that's
thank you.
The goal. I love it. Thank you.
Yeah. And it's so true when you said you're kind of like the middleman. Loan officers are there to go to bat for their clients and really prove why they deserve or need a loan and make it happen, while the underwriters are there making sure all the rules are being met.
Yeah, that's the underwriter's job. They look at the high risk perspective, so that's our job to kind of bring it down a little bit and be like, that's not how it is. You got to look at this perspective. And
when you work with a loan officer, you can definitely tell the difference between a good one and a bad one. And I think that's one thing I like about Shelby is she's a loan officer, but she thinks like an underwriter. So
oh, for sure.
She knows the next thing that's going to come up and how to guide you through those. those kinds
Yeah,
of things.
I definitely try. I actually, getting into this, I was like, maybe I want to be an underwriter one day. And then it's too tedious. I just, oh my goodness. I couldn't sit behind a desk and do a checklist type of thing. But I really love, I want the customer experience to be easygoing, but in a way that's like, listen, this could possibly be something we have to look out for. So this is why I'm asking these questions right now. Does that make sense?
Yeah.
So I try to do that. And also I tell my borrowers too, like if you have a specific question with something, and that's what my team's really great about too, is I can ask questions before I even take the app. So if there's something we're concerned about with your employment scenario or income or potential rental income, I can ask and say, what about this scenario and how's that going to work? And I can get an answer. And it's like, well, this is potentially something that we have to look for. This is what we need. And then I can relay that to the borrower. And if that's not what we have at the time, then they know what to work for.
Right. Yeah.
So.
Well, and you have deals under your belt. Like you've done this numerous times. And so you know what to look out for. So that experience really matters. When should somebody talk to a loan officer?
I think you should talk to a loan officer when you're even wanting to get ready to buy a home. So if you think that is something in the next 6 months, year, 2 year, 3 years, whatever, you need to talk to somebody because you may think it's a certain way, but maybe it's not. Maybe for your employment situation or your income or even your credit, some people don't know those resources. So even people checking their credit, there's a big difference between just like your FICO score and what we use for your credit. We take the 3 credit bureaus and take the mid score of the 3. And those can range dramatically. It's so crazy how much those can range. So you might think you have a 750, but really we're pulling a 680 for your mid score.
Right.
So it's really important if you're getting ready to talk to somebody because you need to know, where you're at so you can know what to work for. And like with my husband and I, when we got our first home, we, kind of knew a little bit about how to calculate our debt to income ratio. So we were kind of doing that. And like, this is our budget because we still want to save this much and this and but we really didn't know if we could. Like you don't know if you can until you pull your credit and you do it and you're like, oh, okay, we can do this.
Right.
And that's exactly what happened. We're like, heck yeah, let's start looking at houses, know? So and it's the best surprise, I guess.
Yeah.
Just finding out you can do it. So
no, that is so true. When I first, I served a mission, got home, had no credit. And I met with a few lenders and they're like, here's what you need to do to start building your credit. And still to this day, when I'm filing taxes, I'll be like, should I file them like this way? Or like if I take out this HELOC, like how does that affect my lendability? So you have all these people that are like, don't show anything on your taxes, write everything off. And sometimes that can be a very, very, very bad idea.
You go to get a loan, you're like, actually, you're not getting $700 in income every month. You're like, no, I make $5,000 a month. It's like, the paper says no. And that's what we have to go off of. So that's the thing too. Like you need to get CPAs involved. You need to make sure, and I offer to look at tax returns all the time. I have those abilities that the underwriters do as far as the income calculation with the taxes, with self-employed and rental income, everything like that. I know how to look at Schedule E's and business returns and input that to tell you, this is how much you're going to be looking at per month.
Right.
So even if you just your income and you want to see how much you could possibly include, that would give you a really good head start on what it's looking like. And if you need to revise anything for the next year and not maybe claim as much.
Right. So. Yeah. Like it's today, actually, I'm going to meet with my accountant because I'm like, hey, like after December, I cannot change things. So what do I need to make another purchase? Like what needs to happen here? On the tax side, it's the same on the home loan process. I've had clients who make like over $1 million a year, barely be able to qualify for like a $400,000 house.
Yeah.
So just be aware, it's not how much you make, it's how much you show that you make.
Exactly. And that's what we go off of. And so a lot of people don't understand that too. They, and that's why, again, it's important to get us involved so we can tell you and we can get that looked at.
Yeah. Awesome. What are the most common loan products out there?
Honestly, probably you're going to hear conventional. Conventional loan products are going to be the way to go because it doesn't have that attached MIP like FHA loans do. But FHA loans, especially right now, we're seeing a lot of first-time home buyers in that just because it has a higher debt-to-income ratio.
Yeah.
So those are super great. And then VA loans are also really common, especially in our area because of Hill Air Force Base right there. So There's a lot of lenders that specialize really just specifically in VA loans. I do them. But yeah, so I see those are probably the three most common. And then obviously, depending on what county or area you're in, you're going to see a lot more jumbos and things like that.
Yeah.
So,
No, that's awesome.
When you say MIP, can you break that down?
Heck yes, I can.
Myself,
So
maybe.
yeah, it's the mortgage insurance premium. So what that is on an FHA loan, when you have a loan amount, the calculation is super easy because for a conventional loan, when you have the mortgage insurance, it actually goes off of your credit and your down payment and the loan to value. But for an FHA loan, if you have a certain loan amount, so if you have like a $200,000 loan amount, you actually times that by 0.85%.
Okay.
And then you divide it by 12, and that's the amount of the mortgage insurance every month. So that's how you calculate it. And then that never falls off though. So when you get to an 80% LTV, it's still there. So that's why a lot of people want to refi out of it, just because depending on your loan amount, that could be real pricey.
Right.
So that's what a lot of people, when I'm going through the pros and cons and looking, but sometimes FHA loans have a way lower interest rate depending on the overlay between the two, conventional FHA. So I'll even if you have good credit, I'll still look, because if you have a smaller loan amount, your MIP is not going to be that much, but your interest rate is going to be a lot lower. So it might be worth it for you if you're not going to be in the home for more than 5 years.
Right. Yeah.
So it's definitely good things to look at.
Yeah. And we could do a whole podcast on like the loan products and stuff like that. Can you give us a simple version of what the loan process looks like?
Yes. So first, you're probably going to come talk to me. You're going to say, what can I do? We're going to get all of the information I need for the application to be able to pull credit. And then once we pull credit, what will happen is depending on if you are doing a TBD, which is you're just shopping, we know what TBD means, to be determined. We don't know what the subject property is yet.
Right.
But if you have a property, then what will happen is we can lock you actually right then. So that's kind of what we would want to do. If you're shopping, we're just going to pull credit, kind of give a good idea of, yeah, this looks good. And then that's when I'd probably bring into, do you want to get pre-approved, or do you just want to sit with this pre-qual and have that discussion?
Right.
But after that, if we have a subject property and we get you locked, then we send out disclosures. And those disclosures are important because it gives you an estimate of what everything's going to cost. And I think what a lot of people don't know is in those disclosures, it's actually going to be on the higher end of what your closing costs are going to be. Because if anything comes in higher than what we quote there, we have to eat it. So that initial disclosure is awesome, because you could be like, well, this is kind of my worst case scenario. A lot of the times they go down. We try to make it as close as possible so you have a good idea. But like if we quote your appraisal for 500 and it comes in at 700, we take that 200. So that's really something that you have to, pay attention to. And an important thing in there too is the intent to proceed. So when you sign that, you're saying we can go ahead and order the appraisal and send you to underwriting. So that's the next step. So we'll go ahead and do that, get you underwritten, get the appraisal ordered. Appraisal comes back, underwriter has to review it. Underwriter will send us a list of conditions. So they give you a conditional approval, which means this loan can be approved if we get these additional items, if there's anything needed. So then after that, we get those to the underwriter, and that's kind of a back and forth thing. We give them something, they say that's not good enough, and we give them something else, and they're like, okay, we're good.
Yeah.
And then we get the clear to close, and that's when we coordinate with title and your agent and make sure that everything else is good. And in there too, I think a big thing too is the inspection, because I think a lot of people don't realize that can affect your loan. But if certain things come back on that, then we have to do a bunch of things on your loan. So that's another big thing too. When you get the appraisal and the inspection, those are really two key points that we look at as well. So but other than that, then we all just have a party after we sign. So.
Yeah, that very simple process. I mean, that.
Yeah, it definitely can be, for sure.
Well, it just goes to show why you need a good loan officer on your side, because there's so many complexities to the process and different loans and what to be aware of. Like as agents, like if we have a buyer buying a house with an FHA loan, we're like, does the property qualify? Because those appraisals are a lot more strict on the condition of the property. Is there peeling paint, broken windows, missing hand railings, stuff like that gets called out all the time.
Yep.
And also keep in mind, just like an agent. Like there's agents that'll be like, oh yeah, I can sell your house for $1 million just to get the business, even though the house is only worth 800.
Right.
I've had so many buyers working with loan officers that didn't know what they were doing, and then like mid-process or near the end, find out they're not qualified, and their earnest money's on the line. There's like so many implications to that, but like choosing the right people to be on your team is a must, because you don't want to get to the finish line and be like, oh, actually, you can't buy this house.
Yeah. Oh, my
Or
goodness.
you have to pay $2,000 to bring down your interest rate or
Right.
something like that.
Yeah, it's definitely scary. And you don't, I try to get all of that out in the open water right before, and we're really clear. And that's what I love about my team too, is our underwriters are super conservative when it comes to that due diligence deadline. So they try to make sure you have an answer a day or two before.
Yeah.
Because the thing is too, is we could have an answer that says you need to do this to be able to qualify for this. And we want to be able to give you time to make that decision, not same day you have to back out by 5 o'clock,
Right.
So we try to really push that. And that's what's awesome about my team too, is we can make that happen and we can push things. And so, yeah, but I agree. It's definitely really scary when you work with somebody that's just there for the money at the end. And they're like, I don't really care what's happening. And they just,
Yeah. Or just tell people what they want to hear. Sure.
No, yeah. No,
We'll give you
I don't
more.
have rose-colored glasses. I'm pretty like, this is what's going on, man.
That's good. We need more people like you in the world. What do you wish more people understood about the home loan process? Is there
Man.
common questions you get all the time, or just, yeah.
Oh, yeah. I think the biggest thing is really just, how do I get started?
Yeah.
So I think a really big thing that's awesome to know about is really how to calculate your DTI, because you're the one that makes the money. You're the one that sees what your paycheck is. I see that eventually, but we go off of your net income, not after taxes are taken out. So depending on how you do your taxes and what your bills are, if you have to pay for daycare every month, we don't see that on your credit report. So we actually don't account for it.
Right.
So you need to make sure that you know how to budget accordingly to your house payment and what your savings goals are and what's going to make you comfortable. And that's a big question I ask when I get started too, is there anything else that you have? Because if I take you to this DTI ratio, let's just put into perspective, this is how much money you have left over at the end of the day. So I think that's the biggest one that I'd say, just budgeting and knowing what to work with your money, because nobody wants to move into a house and be like, oh crap,
Right.
this sucks.
Yeah. You
So-
don't want to be house poor.
No, for sure. And so I think that's a really big one. And I think also too, just being in this industry, like you get shopped as a lender, and I think it's great. Like
Yeah.
I'm gonna win. So I'm not worried about it, hopefully.
Yeah.
But I think it's so smart.
Mhm.
But I think people don't really know how to do it. I
Right.
think they just pick a lender, and then they're like, "You're my lender."
Right.
But the scary thing with that is a lender could be charging you $3,000 more in an origination fee than the other lender would. And so I think what you should do is pick about 3 lenders, go 1, 2, 3, and get it in an email too, and say, "Hey, this is my scenario that I'm looking at.
Yeah.
This is what I want to know. What's the interest rate and how much am I being charged for that?
Right.
And can you break down your fees for me?"
Mhm.
And then I think too, when you're shopping, just not even for price. Everyone's different, right? Some people don't give a crap who you are, what your personality is, or the experience that they get. They just want to save money,
Mhm.
which is great. But I think too, when you're shopping to save money, you also need to be shopping for your experience. I think
Right.
a lot of people don't understand that they are in control of the experience that they have.
Right.
When you're done with the home buying process and you're like, man, that was horrible. Like, I feel like there was no communication. Everything sucked. Nothing went my way.
Mhm.
You can pick your people that are on your team. And so it's your home buying experience,
Right.
not mine,
Yeah.
not Michaela's, not yours.
Yeah.
It's theirs.
And don't be crying to us. Like I hear all the time, somebody picked a lender and they're working with, and then we're supposed to be closing. They got moving trucks loaded, and the lender's like, "Oh, sorry, we're going to have to close next week." And they're like, "Well, what do I do with all my stuff that's in the moving truck?" And they're like, "Sorry, like you'll just have to figure it out." And then they end up incurring like thousands of dollars in storage fees and like misplacing their stuff. Like I don't think people give enough weight to the experience. Like everybody just looks at like the price,
Right.
but there's like a difference between a McDonald's sandwich and like a gourmet hamburger at another restaurant. So
for sure. And that's the thing I think people don't realize too is I'm more than happy to price match, rate match, whatever I need to do. But I'm going to take care of you too.
Right.
I'm not just going to, but it's hard because you learn how to read a room too, right? You read a person, you read, okay, they're not here for they don't care. They just want the big money. So I try not to sound too sharky too, because I don't want to be like, what do you need? I got it, you know? So, but at the same time, like, I hope that shows like, I'm willing to make this work for you. And
right.
So I don't know. I think that's the biggest thing. And not even just shopping for interest rate, but also homeowners insurance. Nobody does that. I didn't do that.
Right.
And my husband and I actually just called me on my way here and said, oh, wow, I actually called, this insurance company. We're going to save $150 a month on our homeowners insurance.
Dang.
Yep. So you need to shop for everything. Even title companies.
Right.
Email the title company and say, how much are your fees?
Right.
This loan I just closed last month, they saved $1,500 in title fees. So it's very important. People want to help you. They want your business. And if you make your money work for you, then it's going to be great. And you're going to have a team that just surrounds you and wants you to succeed. So
no, that's awesome. Awesome input. So what are a few things that buyers can do to prepare before they talk to you?
I think it really comes to the budget thing.
Yeah.
And just making sure that they know their budget and to prepare that way. And the credit thing too. If you have no credit, there's things that we can do to show, like if you're renting, you don't have any credit, we can get like we call it an LOE, but it's a letter of explanation from like your tenant that says that you've made your payments on time.
Right. Yeah.
And we can get stuff like that. And even for like utilities, like we can get statements for that too. But it's just a lot easier if you have that credit history and not keeping all your eggs in one basket. So don't go and get 7 credit cards and nothing else.
Right.
Like have a couple credit cards, get a line of credit, get a car loan, and paying interest isn't fun sometimes, but it helps you build your wealth and it helps you build your credit. So I think there's a smart way to go about doing all of that. And our bank actually has crazy awesome resources for building credit. It's all on our bank page. And we have a secured line that you can, get to help you build your credit too. So there's things that you can do. If you don't have anything, like the day you turn 18, you should go get something.
Right. A credit card, a car loan,
something.
a
line
scooter
of credit,
loan,
free.
something.
Any credit union that you bank with will give you $500 like that. Like they don't,
Yeah.
But I think too, don't go above 30% of your amount because your credit will drop significantly. Really? Oh yeah. So if your line is $1,000, you don't want to go above 300 because it will affect you like crazy.
Gotcha.
Yeah. So I think just that too, understanding credit, and I'm not a credit advisor, so I can't tell you, this is what you need to do, but this is just my personal credit, what I've seen in other people too. So when you're getting prepared to buy something, it's like a home specifically, that's a conversation you want to have with the lender too is, should I pay off this debt to raise my credit score? Like, how's that going to affect my interest rate? Or should I save this money for my down payment to potentially buy down my interest rate?
Yeah.
You know what I mean? Because if you're above a 740 credit score, it's really actually not going to affect your interest rate. Like that's the highest we go off of. So I don't want you to pay off a credit card, like pay $3,000 on your credit card when you could use that to pay down your interest rate when it's not going to make a difference if you have an 800 credit score. So
what about the people that, like for me, I have credit cards. I put everything on my credit cards, but I just pay them off each month. Is that good?
Yeah. That's great.
Or should once every other month let some pay some interest on that? Because I never pay interest. I hate paying interest on it.
It's a waste of money. It's crazy. If you don't have to, don't do it. But that's what I do too.
Yeah.
I do that same thing because especially the credit cards that give you points, whether it's Sky Miles or money back. We've made almost $1,000 worth of cash back this year just from using our credit card with everyday purchases.
Right.
So it's definitely a great way to go, but on your statement balance when your credit pulls. So if you pay off every statement balance, it's going to show that you don't owe anything.
Right.
But if you have a statement balance and we pull your credit, that's what gets reported on your credit report.
Gotcha.
So we go off of that minimum payment. So, but that statement, when it hits, that's when your credit gets affected.
Gotcha.
So you just want to make sure that if you're paying off every statement balance, you're good.
Awesome.
Yeah.
And HELOCs.
Yeah.
We should talk about that because I didn't realize that when you pull a HELOC, and you're not using it, like it's basically like a credit card maxed out.
Oh, yeah, because we don't know if the day after you close your loan, you're going to go max out your HELOC. We don't know that.
Yeah.
So highest risk perspective.
Yep. So just be prepared if you pull a HELOC, make sure, and you're wanting to purchase something in the future, make sure that you can cover that HELOC payment maxed out and whatever you're trying to buy.
Exactly.
Awesome. What shouldn't buyers do when they are working with a loan officer on purchasing a home? I'm sure there's a long list.
Don't change jobs. Don't get a new credit card. Don't buy a new car.
Yeah.
All those things. And the reason why, especially for the job thing, like if you're like, heck yeah, I freaking got a new house, I'm going to get a new job and make double money. That's great. But we do a verification of employment. So if we call your employer and they say, oh, she just put her 2 weeks in, we're like, well, we don't know if, because the new job, like just say worst case scenario, right? The new job, what if they're like, guess what? Actually, we can't extend this position to you anymore. Then you don't have a job.
Yeah.
So what would happen, and that's okay if you're going to change employers, we don't want to keep you from that life change. That's important.
Yeah.
But what we look at is we need to see that first paycheck from that new employer hit your account to reevaluate that new income. Right. So it's okay if that's going to happen, but that's where the communication comes into effect.
Right. Don't try and hide anything.
Don't hide it. We will find it.
Yeah.
And if we don't, then you got away lucky. But yeah, so those are the biggest things. Just don't open any like your money freezes. Don't do anything. Don't do any big life changes. You just got to stick it out till you close. Once the house is yours and it funds, be free. Do what you want.
No, that's awesome.
I think one other question I get in the process is like big deposits, because you guys have to verify all those deposits too, where they're coming from. And it confuses people so bad because they're like, it's in my account. Why do they care where it came from?
For sure. But yeah. The biggest thing we look at is if a deposit is more than your monthly income, that's the ones that we need explanations from. So if you just get a random deposit, like that's great. But if you're getting gift funds from somebody, we need to document that, because what's crazy is even though it's gift funds, and they really just have to come from family members, like you can't just get a random gift fund from someone that you don't know, but they have to sign a letter saying that this is a gift.
And there's no like return of payment or anything like that.
Because people will do lawsuits and be like, I gave them money to get in their house and they have to pay me back. So everything needs to have, we have to do everything a certain way. And those large deposits too, as crazy as it seems, like you wouldn't think that people are going to be laundering money or whatever, but it happens. So that's what we have to look at too.
Yeah. What advice do you have for buyers in today's economy with high interest rates?
That's a good question. I have people ask me that all the time. Like I'll post stuff on Instagram and they'll be like, so I have a question for you. I'm like, I can't wait. I'm so excited. I love questions. I'm like, what do you want to know? But that's like the $1 million question right now. Is like, is it a good time right now?
Yeah.
And so many people and we see all the time too. It's like, if you can do it, it's the best time.
Right.
Just because you will not say that you regretted it.
Right.
So 5 years from now, you're going to say, man, I wish I would have bought a house. Yeah. Because you would have had 5 years worth of equity, paying down that principal and been able to refi if rates go down, and you would have a home. People don't really, I think now, because rent too just keeps going up. And so I think people don't realize when you pay $2,000 a month for rent, that's going nowhere.
That's 100% interest.
100%. And even with the high interest rates right now, your interest might be $1,200 of that $2,000, but you're still $800 going towards that principal.
Exactly, yeah.
It's like a built-in retirement savings account, something for your kids. Like that's what's so important for me too, is like I am building something for my kids to have when I go, and I eventually would love to do, have multiple properties and have all that, set up, and that sets you up for that too, because if you're going to give multiple properties, how are you going to come up with that down payment? If you have that, home to take that equity from to go buy another one and all of that. And even if you don't want to buy investment properties, just buy another bigger home. Your home appreciates just like all the other homes do. So the equity that you take out, you get to put down towards your next home. And so like we sold our first home right when the house prices were stupid high and the interest rates were stupid low. And so I feel like we robbed a bank and got away with it. Right. It was crazy. Like it was the fastest way you could earn. And obviously the market's not always like that, but that just gives a perfect example of like, it's predictable in a way, but also it's not. No one could have predicted that was going to happen. Right. So I think if you just get in there and do it if you can, and it's smart for you and your financials at the time, then you need to do it.
Yeah. Well, and there's an aspect to life that people don't talk about, and that's just like the experience. Like, we could die tomorrow.
For sure.
Or in next year. Like, you don't know how long you're going to be here. And there's those experiences of being in your house, having Christmas there with your kids, like having families over for family dinner. Like, there's a lot of joy and happiness that comes from owning a home that I think people don't look at. They're just only numbers. Right. It doesn't make sense. And it should make sense. Like, you should be able to afford it. We don't want you to do something dumb that you can't afford and that you have to give up later. But had I bought, 10 homes back in 2008 in the great, the biggest housing crisis ever, and if I still had them today, I'd be happy I had them,
Oh, yeah.
Right? Because they've gone up way more in value. So it just depends on if you're able to weather the storm, like, jump in. Like, you don't know what the market's going to do. It could go, like, when you bought your house, values were still up. But looking back now, like, you're like, hey, we're still ahead,
Oh, yeah. Well, and that's the thing, too, is, like, I bought my house at the crazy time when it was high, but I also sold my other house when it was really high.
Right.
And so I understand that maybe I couldn't sell my house for as much as I bought it for right now, but I'm not going anywhere. And so that doesn't really affect me. And I think that's a good, important conversation to have, too. If you're just going to be in the home for a year, maybe you don't want to buy, or something, just because, especially the way the market's moving, because you're probably not going to make your return on it.
Right.
But that's why that conversation is important. Because if you're like, timeline, what are you looking at? How long you're going to be here for? That's going to be a good investment for you.
Yeah.
So I think.
And if people are able to be there for multiple years, like, especially 5 years plus, I'm always like, just get in, find the right property, the right house. There's so many strategies that you can do to make it work for you. You can rent the basement out. Like, there's just so many ways you can make the numbers work. But if you're stuck paying rent and you don't have another option, 100%, I think it's better to go look into buying.
Well, and don't you feel too like so fulfilled knowing like this is mine?
Right.
I could tear down a wall if I want to. I can redo this whole house if I want to. I can make it mine. If you're renting somewhere, you can't do. There's very limited things that you can do. And then you just know too, this isn't forever. I know I'm not going to be here forever. Your landlord could kick you out at some point if they wanted to, So I don't know. It definitely has lots of pros.
Speaking about tearing down walls, Michaela just did that on their cute little townhome. So
we did.
How has it been?
We did. It's been good.
Yeah.
It's been a lot of fun. We gutted the whole thing and put it back together. So.
It looks amazing.
It does.
Thank you.
Oh my goodness.
Definitely not there yet, but it's coming along.
But it is cool to have like something that you own. You're like, this is my dirt,
your baby,
my sticks and bricks.
Yeah.
So what are a few resources? I know you mentioned some of them, and maybe you can send us the links and we can link them here in the in our blog area. But what are some resources that you feel like would be helpful for our viewers? Any websites, books, podcasts, or anything like that?
Yeah.
That would help them?
Yeah, I think really like wherever you bank, wherever, like go on their websites, look at what they offer, go into your bank or whatever, or talk to me, and even if you don't bank with us, we can still offer you a lot of these resources without having to bank with us. And so I can definitely give those to you, just the credit stuff, the, like helpful tips and tricks. And I think really on Instagram, I follow so many mortgage people and real estate people because as a community, I think we all can help each other like, oh, I saw this and this happened, so watch out for that.
Right.
Or, so I just think things like that, just knowledge that you can see, and it's crazy how much you can absorb and what stays when you see different things. And so I think, you might find yourself getting addicted to the real estate market if you do that. But
it's easy to have that happen.
Oh yeah,
happened to all of us.
I never thought I would be here, but here I am. Like, every conversation, I'm like, so you want to talk about real estate?
Yeah.
But yeah, so things like that. I think just the resources about credit and those types of tools are going to be really helpful.
Awesome. And lastly, Shelby, where can people find out more about you?
Oh, my cell phone number is all out there on the black web, so you can find it and call me, or you can look at our bank website. All my stuff's on there too. My Instagram, I can give that to you as well.
Yeah, we'll link
and
it there.
You guys can give me a follow, and I try to post a lot of mortgage stuff, mostly on my story when I, with different things and helpful tips, but I also have my link there as well to apply. So everything's just right there, ready to go.
Well, thank you for meeting with us today.
Heck yeah. It's been great. Thanks, guys.
Until next time.